Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the E-mini, and we talked yesterday about the range. What's the range? 18, 1800 to 1805 on the downside, 1940 to 1946 on the upside. We come up here, we do 43.75, we did 40. We did 46 and change, 46 half. We had the initial break in January, lower high, knocked it down to the low, and we've been in a range. So what's the market telling us now? So far, based upon yesterday and what we've seen in the overnight, so far the market wants to stay in that range. A big test of whether or not the market is really truly serious about staying in the range is how is the market going to deal with the middle band on the daily chart, the middle Bollinger Band, the 20-day simple moving average, which is 1891.30 as I'm talking to you. If it breaks it and holds it as resistance, that opens up pretty clearly the bottom of the range. We took out some key areas yesterday. 1940, obviously. The monthly pivot up in the 25 area. 1919, we are 20 handles below that. That was a huge area yesterday. We've watched 1919 for many years, and it tried to be the low yesterday. They tried to hang on with 1919. 1919 area provided a fantastic long. And the break of it set up, a really nice short into the close for us off of the 24 area. So, losing these areas, and now we're trading below the weekly pivot. The weekly pivot is at 1904. If the weekly pivot seals as resistance in RTH, and I don't think they're going to get away with that without heading up a little bit higher. Your failure area in the overnight off the Europe Open was, wait for it, 1919. I would be surprised if we didn't at least make a run at the 1908 to 1910 area. If the bears are going to control the day, then you're going to see that area fail, and you're going to build some lower highs and lower lows as it goes. But as I said, a break and hold of the middle band on the daily chart plays out the thesis that we discussed yesterday. We talked about two things this week. Monday we talked about what were 1940's intentions. Why did we have to figure that out? To figure out whether or not we're going to stay in this range or not. 1940 had all day on Monday to break over. They couldn't get it done. Okay? They did 43 and change. They couldn't get it done. Yesterday was about whether or not we're still in some kind of a range trade. So far we are. Now, it's 100 handles down. A lot can happen in 100 handles. A lot can happen in the next 5 minutes. So the worst thing you could possibly do is just lock yourself into, targets and numbers and things like that. I think it's a terrible way to trade. Trade what's in front of you, figure out your risk, and then, one trade at a time from there. That's how we do things, and it serves us pretty well. So keep an eye on 91 on the downside. Keep an eye on 19 and 25 on the upside. And, we'll see what today brings. But for now, the range lives. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.